the end state of the Japan playbook playing out right now, like one can make a very strong argument that if markets do take in information, digest it, and make decisions based off of that, like I don't think the US is going to have the luxury of multi-decades of yield curve control like the Japanese have had, because people are just going to be like, all right, they're doing what Japan just did, and Japan is functionally hyperinflating right now.
Yeah, I think that's right. I think if they do try yield curve control, right, we will see. I mean, first of all liquidity sensitive assets will rise, but Bitcoin trades on a multiple of those, right? So historically, it's been seen to be around 3x of QQQ, but even more so just based on global liquidity and Fed liquidity, it's more sensitive. Um, and again, it always isn't completely immediate and isn't completely accurate because we do have temporary contractions like what we saw this week with the Bank of Japan hiking. But in the long run, it's very correlated with global liquidity. And if we have yield curve control and basically infinite QE, which is what yield curve control implies, there's no cap to the Bitcoin price. You got to remember that several million coins are basically permanently frozen, either in just cold wallets and lost seed phrases, or Satoshi himself, who hasn't moved his coins in over a decade. So the amount of actual available Bitcoin that's circulating is very small, right? 75%, I think, of all Bitcoin is held by hodlers who've held it for more than 1 year. And so to get those people to sell, you need to give them very, very high prices. And some people will probably never sell, right? A lot of Bitcoiners are extremely adamant about that fact. And so what that means is that the liquidity on the exchanges can dry up, and it could dry up fast. So the actual price we could see per Bitcoin could be, incredible. Who knows how high it could go? I think that there's truly you can't price a finite asset, with an infinite one in the end.
It's going up forever, Laura. It's going up forever. No, I do. I mean, not trying to be like the FOMO hype guy, but like I do think people have cute like 250 to 500k targets, and maybe that is the limit to which Bitcoin goes next cycle. But I think considering everything that's going on with central bank monetary policy and the global debt crisis, they're moving in exponentials, and it seems like Japan is really going to see like hockey stick exponentials at some point in the next couple of years. And this week was just like the nail in the coffin. Like you can't raise rates, you're fucked. And then if the U.S. goes yield curve control, similar situation played out in hyperspeed. And if between now and yield curve control, the Fed is forced to hold rates up higher than they'd like, that's just going to really exacerbate the interest expense on the debt. It's going to force the Treasury to issue bills over long-term bonds because they don't want to roll over that debt at higher rates. And if they do that for long enough, the market just similar to the yen carry trade, it's like, oh, they're just going to keep loading up the short end of the curve. So this is the new normal. And I don't think people understand that we're in the new normal.
Yeah, no, they don't. And I mean, I even mentioned this in one of my pieces, right? Like the Fed itself, if you look at the breakdown of the tapering that they've been doing, right, their layoff of bonds, if you break down by maturity on Fred, our own central bank has only been laying off the bills. They've only been able to get rid of bills on their balance sheet. Everything on the long end, past 20 years, 20 and 30-year bonds, they haven't been selling. In fact, especially on the 30-year, they've been accumulating bonds. So their taper is kind of two-sided. They're selling extra bills so that they can make it up by swallowing more bonds. But on net, their balance sheet is decreasing so they can claim that they're tapering. But again, it's kind of a quasi-taper because, yeah, sure, they are tapering, but they're tapering with only bills, which is a lot less restrictive to the financial system than bonds.
Yeah. How are you preparing personally for this?
Buying as much Bitcoin as I can. you know, uh, I used to trade USD but with all the volatility that the Bank of Japan has brought into the market, right, with their random interventions and moves in rate hikes, I just decided I'm not going to try to day trade this. It's too easy to get stopped out. I'm going to just let this thing ride, and I'll just bet on the horses that I know will win in the end, which is basically, to me, Bitcoin, a small amount of gold, and U.S. equities.
Yeah. Yeah. And that's one thing I'm thinking through. Like, if obviously Bitcoin podcast, I'm sort of pot committed to Bitcoin at this point, professionally, socially, family wise. Bitcoin doesn't succeed. I've got a lot of introspection to do personally. I don't think it's not going to succeed, but that too, and trying to think of, I mean, it sucks to say, but all of this turmoil is going to bring economic stress in terms of people not being able to hold on to assets, whether that be real estate, energy assets, whatever it may be, and like looking for cheap opportunities to step in when the timing's right to try to get hard assets similar to Bitcoin, whether it be energy or real estate at good prices, not as an investment, just to hopefully purchase and maybe monetize, particularly the energy assets. But it's going to be an interesting couple years here, that's to say. And Bitcoin is the lifeboat, and it is the alarm system. And anybody who's out there looking at the price swings from earlier this week thinking, it proves Bitcoin's use case is not what it's marketed as, is do some more research. It is exactly how it's marketed. People are going to leverage the most liquid and always open market if they need to. And that fundamental use case has utility that does not exist anywhere else.
Yeah, and think about that. They were saying that with Bitcoin at 500, at 1,000, at 5,000, at 15, right? They were saying that all along the way. So it's kind of hilarious that it's the Peter Schiff meme, right? It's Bitcoin is no good, it's crap, don't buy it, it's all a bubble, and yet every single year that bubble keeps rising, right? And talking about my own portfolio, I do own a little bit of gold and a little bit of equities, but I understand that Bitcoin is the most sensitive thing, and it should be a large, at least for me, I think it should be a large part of your portfolio if you're getting ready for this next wave of coming debasement. I think it's going to be the thing that rips the most, and I see a strong argument for why you should have it be a majority of your portfolio, or at the very least a small fraction. And we've seen that start to play out. If you've noticed, like the state of Michigan, or it was the state of Wisconsin, maybe, pension funds started buying Bitcoin to their adding Bitcoin allocation to their portfolio. The Jersey City, also pension fund for firefighters and policemen, also started adding Bitcoin to their pension fund. That's just in the last few weeks. We're seeing an increasing acceleration of institutional adoption, and these ETFs have also really opened the door for this, right? It's allowed financial advisors, fiduciaries to have a legal, safe, and regulated way to buy Bitcoin. And again, it's not the best thing for them to do is to buy actual Bitcoin, but for the normies, that's kind of scary. And so buying an ETF can kind of be the entryway, the gateway for them to get into Bitcoin ownership and start to understand what this asset is. And hopefully eventually, we're going to see better and better custody solutions, especially on the institutional side, for buying and holding Bitcoin long-term that will, make the boomers comfortable with holding this asset that's unique, that they've never held before, and they don't know exactly probably how it works.
Hey, do you still have your Bitcoin on an exchange? Don't hold your Bitcoin on an exchange. Take it into self-custody. If you're looking for an easy way to do that, we have the BitKey. BitKey is Bitcoin made easy to use and hard to lose. Take the first step, get your Bitcoin off the exchange. Check out the link in the show notes. That'll get you 20% off your BitKey, or use the code TFTC20 at checkout.